Sentimental FX update for the 10th of February. S&P chart on the daily. It's a good lesson learned today because even though we had like quite a fall, what happens with the indices is that they fall and it looks like it's going to continue. Especially if you look at the small time frame. Now, I'll give you an example. See, this action here is actually, it looked quite scary on your chart, on the hourly. And what you'll find is that most retail traders will use small time frames, and by doing so, they get very wrapped up in like the move. But it's very advisable, as you would have probably, from experience, you would know, just to take a step back and look at the bigger picture. And if you were to zoom out, really, this candle that we're experiencing right now at this very moment in time is nothing from that COVID low. How far we've come. And there's no justification or any rationality for a decline. They were saying it as algo-driven price action. But really, look, if you were to just to take a step back, you think, well, that's quite nothing really. But if you were to look at your small time frame, it could be potentially quite scary. And it's a lesson learned for me because I looked at this and I'm like, wow, this is really falling. And it's a bit silly really because I've been training for a long time, but it kind of gets you like psychologically motivated. You're very involved in what's going on in front of your screen. And you sort of forge a bias from what you see. But the lesson learned is really just to take a step back and then just zoom out and then zoom out even more, and you're like, oh really, that's nothing. You can handle that because you've got this enormous momentum behind you. Okay, admittedly, if we were below the pivot, then maybe that might change the bias, but we are above monthly pivot, we're above MR1, and we're nearly hitting MR2. I personally think this is going to be a strong resistance, but who's to say? The sentiment has shifted a lot towards risk on because the guys have sold it in a big way, and not just the US 500, but all the indices across the world. They've become quite bearish, and what they've done is did something that I did, which is quite naughty, and they've got like emotionally motivated in watching what's happening on their screen. And it's easily done, and I think that's how they get people. They get them trapped by inducing these moves, so it makes them wanting to sell. So it's a good tip for you guys. If you're watching the video, look at your daily chart and then zoom out. Okay, and then obviously if you're gonna enter, then you use small time frames. You've got some support here, for example, and then your stop could be here. Something very, very tight, very clever risk management, and you should be fine. But the trend. Don't fight the trend, and that's what the retail guys do. They try and call the top. Okay, so just before I go on and talk about the currencies, I think the currencies are trying to front run a risk-off scenario, which is quite interesting because we're seeing on the hourly that we're seeing some breaks of some support. So I'm not sure whether or not FX is going to be like an omen for the risk off that could potentially arise tomorrow or Friday. But it looks like we're seeing a little bit of a sell-off here, perhaps spooked by the little sell-off that we had in S&P today. But likewise, you have to look at the daily on AJ and see we're above monthly pivot, for example. So as long as we're above that, we're technically okay. It would change and flip bias if we're below monthly pivot. So remember to take a step back. But we have got resistance here at MR1, which could be a good entry, to be honest, 8102. And your moving average trend is bearish as well. Parabolic SAR, stochastics indicating quite a bit of weakness. And also the currency pairs that I'll talk about today, they're going against the grain, where you'll see it's a buy on the sentiment, but technically it's not in the correspondence. So there's like a bit of a disharmony, a bit of disparity between the sentiment and the technical and possibly fundamental. So there could be something brewing, and I think FX might be an omen of what we can expect potentially. So SLC 8120, 8058. See AU's fallen a little bit as well. There's your big stop loss cluster. It's the largest one. Not gonna let me load it. 77. I think, yeah, 777. That's really annoying. It doesn't load the stop loss clusters. So 7715. That's really annoying. It used to load the stop loss clusters. I can hover my mouse over and it should load. There we go. 15720. 15629. EU. So this has fallen too. So I mean, it could be fundamental play. And don't forget, actually, it's worth noting the dollar bubble is very extreme, and no currency pair likes to be cornered. And we saw the dollar bubble very high up in the top right section. And normally bubbles don't last long there. And what happens there, it indicates that stops were taken, and it's like a sign of exhaustion. So it could actually be a reversal on the USD. And there might actually be like a correlation breakdown between the USD and the indices. So, we have to bear that in mind. It could be that the dollar might become more of a buy over time. So, we'll have to wait and see. SSC. Oh, it's going to load, but it's just very slow. 12145. 121 on the dot. Exactly on the dot. So that's not that far away, 19 pips away, so it's possible. Signal saying to sell. GU. Let's do this. 138.69 and 138.24. I'm selling this because I'm long the euro pound. Because I think we're going to have good support off MS1, and we also overdid it a little bit as well. And then thirdly, we could argue that the FTSE companies don't really want a strong pound, so there might be a little bit of intervention there. It doesn't do the UK economy any favours at all by having a strong pound USD, because we're primarily an export economy. So there might be some intervention there that would try and push price down, and that would disagree with the sentiment, because the sentiment is saying to buy, signal saying to sell. So there's that disharmony. So it could be just sit on your hands the next couple of days. Oh, it's just so slow. Apologies for this. 138.25. NU. I'm going to look to sell this because our Kiwi bubble is the strongest, the weakest sell. So that's going to be worth looking at. 72.60 and 71.95. We are a buy at the high level, but the signal is saying to sell. So there is definitely something cooking, I think. EJ, this big move. I'm also short this as well. So we have to wait and see. Ideally, I want it below monthly pivot 126.55. SIC above is 127.20. 126.38. Signal saying to sell, but we're a buy. So there's a disharmony again. Technical and sentiment. Could be technical and fundamental. Pound yen. We're taking the SLC out. Fairly large at 2.48. The SLC above is 145.10. And you have to get their SLC indicators to see whether the stop loss cluster is next, because I can't wait around for ages for it to regenerate. Look at the size difference as well. That's important. Dollar yen. I think I must be getting Windows updates or something. 104.91, 103.5 on the dot. This is a large stop loss cluster. It's not as large as the Aussie dollar, but it's still quite large. So this could be a magnet, but we are above monthly pivot, so want to try and buy dips above that. dollar CAD. I'm out of this trade now, which I'm happy about. Made a good pips, and yeah, it was quite a nice little trade there actually. SOC 12710, and one below is 12664. We are still at the high level. Signal sent to buy. So there's that disharmony again. I think everything is in a disagreement with the technical and sentiment. So be careful next 48 hours. SOC for dollar Swiss 89.21, 88.83. We are a sell, and there's some guys going long, so we should be coming down. And this is monthly pivot as well. So 88.63. Assuming we hold above that, we are bullish because we're above MP. So it might be a case of technical overriding sentiment, and the fact that the dollar bubble is very extreme. So we could probably it might back off out that corner. There's gold, which would indicate that dollar strength as well. So let's have a look. 1881 and 1832. Bit choppy on the moving average. We are still at the high level. So this could be one that actually agrees with the sentiment. So yeah, I mean, we're breaking this trend line, but we're above this one. Look at the daily. Sort of descending. Oh, actually got a quite nice triangle there, actually. Does that work? Okay. So yeah, that's going to be quite bearish. We're actually at the junction point, right below. So yeah, technically we could be a good short there. Moving average is saying to sell, but the signal saying to buy on the daily anyway. So hopefully the video was helpful. Sorry that it took so long to load the stop loss clusters. It was quite annoying. I think I must be getting Windows updates. It's going to be a tricky Thursday, Friday, I think. So it could be just good to monitor. We did very well in the signals this week. We made 102 pips. It could have been more, but then again, it could have been a lot worse. And so this is a good representation of what to expect for weeks going forward. And it looks like January was the sheep getting fattened up for the slaughter. It kind of makes sense in a way that they would be allowed some time to really get in to trade and start making profits, because that's what gets them involved. And now they'll start losing a lot of money and then we'll profit, which would be awesome. So stay tuned to the videos. Don't forget to like and subscribe, and I'll see you tomorrow.